Good morning, everyone. Welcome back to the channel. This one might be a little long. NeoGenomics NEO, $6.40, crashing in the past week 35%. Year to date, it's down 61%. And in the past 5 years from 2021, it's down 86%. Currently at an $800 million valuation now. What is going on? What is this company? What do they do? All right, so we're on the website right now. Check it out. All right, let's see. What do we got here? Okay, so about NeoGenomics. To summarize what they do, basically it's a cancer testing company. They help doctors figure out what kind of cancer a patient has and which treatments might work best by running these advanced tests and blood work and tissue samples. They also work with drug companies to help develop new cancer treatments. This is what we're doing today. $6.40, $822 million valuation. First off, what happened here? From 2021, September 2021 at $52 was at a peak and it just crashed for the next 2 years. Okay, so right off the bat, of course, starting with the numbers tell you everything. Data is everything. So from 2021, 2022, you could already see from their earnings. So it's going to be these two graphs right here. Take a look. From 2021 to 2022, you could already see the red. From 2020, they posted 0.04 earnings per share. Next year after that, 2021, minus 0.07 in earnings per share. That is a 275% decline year over year. And then the big one, 2022, they posted negative $1.16 in earnings per share versus 0.07. That is down 1,557 year over year. That is a massive drop. In 2021, they pretty much started getting negative income, and then it dropped down all the way to negative 144. So minus 144 million in net income in 2022. Also, in March of 2022, the CEO departed and they started doing a new CEO search. So right about right here, March 28th, the CEO resigned, which pushed down the stock even more. Negative net income, negative earnings per share, the CEO leaving. They also withdrew their full year guidance that year. Looks like from June of 2022, it's been flat. So it's been flat, doing nothing for 3 years. There's no life in this company right now, ever since all that drama. Okay, so now let's go to more current events. What is currently happening with this company? So it looks like the new CEO that was currently running the show from 2022 is set to retire April 1st. Yeah, April 1st is at $9.35, down 31% after announcement. So another CEO has resigned. So in the past 4 to 5 years, this company has had 3 CEOs. That's not a good sign if the CEOs keep leaving a company. But yeah, so there's a new guy running the company, Tony Zook. Let's see what he does. The Executive Vice President, Commercial Operation of AstraZeneca, where he held global P&L responsibility for all the AZ brands and markets. So yeah, I mean, at this point, in the past 5 years, this is pretty much the low of the stock. And I guess the question you need to ask now is it a good time to buy the stock at an $800 million valuation, $6.40? Is it undervalued? Will Tony Zook turn this company around? Straight to the quarterly data so we could see what's been happening for the most recent. So we have earnings per share, total revenue, profit, margins, free cash flow, and of course, net income. Let's see how they're doing. So as you can see already, total revenue right here. Top line has been improving year over year for the past 2 years. Although the growth isn't really that great, it looks like in 2023 they were averaging in the teens, and the growth has slowly come down. They're only growing 10% year over year, 10%, and now 7% year over year. Huge slowdown in growth for the past 2 years. We want to see total revenue actually growing 25% to 50%. That's when you know a company is growing pretty well year over year. Some of the best companies out there are growing 100% year over year. Latest earnings per share, negative 20. It's up 4% year over year. Again, no growth. 2024, they pretty much posted flat growth. Okay, profit margins are good. 43% profit margins. That's pretty good for a company. And go down to free cash flow per share and cash flow from operations. It's pretty much been flat, minus 25, minus 23, up 8% year over year. Third quarter of 2024, they had a bad year on free cash flow. And then slight improvements from the beginning of the year early in 2024, but nothing crazy. Lastly, net income, also flat, negative 25 million in net income versus negative 27. It's only up 4%. I mean, just by looking at these numbers, you could kind of see from 2023 to 2024 why it's just been flat. The stock's been doing nothing. It's just been hovering around $10, 15, now down back to 6. But it's just been flat. There's no action on the stock. And it's because the numbers are reflecting that there's not really any growth. 10% growth year over year, that's nothing. Peanuts. Earnings per share is not growing at all. We have no consistent free cash flow per share. Remember, in the long run, free cash flow per share, we want to see this positive, and also the yearly free cash flow per share is still negative. So what's next? Can Tony Zook turn this business around? He's starting this month. Let's see what he talks about and what his plans are already. Yeah, so again, $6.40, $800 million valuation. Let's take a look at some of the qualitative stuff now. So yeah, Q1 2025 financial results just posted, down 36%. Let's see what's going on. So this will be the first quarter of Mr. Tony Zook taking over. Let's see what he says. So right off the bat, check this out. He already talks about how they are going to enter the next phase of growth. We will dedicate more resources to innovation through research and development, business development, and commercialization of new products to provide patients with more options for their care while expanding our market reach. So it looks like he's going to funnel more money into research, into R&D and sales and marketing. And one of the first things he did was in March, they announced the acquisition of Pathline, a New York State approved lab based in New Jersey. All right, so they are already expanding and using some money. They just purchased Pathline right here. So this is a good sign because they are already going to start investing in growth. This allows them to expand their capabilities to accelerate growth by establishing a local presence in the Northeast. From this acquisition, it will be incremental to their top line. Already, this guy is already launching some upcoming product launches. They're expanding their sales force. So they currently have 140 people on their sales team. So new CEO, new products, new sales team, more R&D. Already just from that, it looks like he's going to try and turn this thing around. Let's take a look at the balance sheet next real quick to see if the company is going to stay afloat. Okay, so total cash. They have $358 million in cash with $340 million in long-term debt. We ended the first quarter with cash and marketable securities of $358 million. Check this out, guys. We still intend to pay off our May 2025 convertible notes with the principal balance of $201 million using the existing cash. Looks like April 30th, 2020, they offered convertible senior notes where they raised $125 million. The notes will mature on May 1st, 2025. The convertible senior notes were supposed to convert at $36.34. It's at $6.40. There's no way. There's no way these convertible arbitrageurs are going to be able to profit from these notes at $6.40. There's no way it's going to reach $36.34. So what's going to happen? They're going to have to pay back. So with a principal balance of $201 million using the existing cash. So if you subtract $200 million from here, they pretty much only have $158 million in cash. $800 million valuation with $150 million in cash. That's not too bad. So keep that in mind. They don't actually have $358 million in cash because they are going to be paying back these convertible senior notes that was offered in April 30th, 2020. Okay, so they talk about how they are going to be increasing their spend in sales and marketing and research and development. Bigger. Okay, so I pulled up the annual statement. And so we could take a look at the details of their operating expenses. And as you could see, 2024 is on the latest left right here. And we take a look at sales and marketing. $84 million is spent on sales and marketing, up from $67 million, $70 million in 2023 to $84 million. They're spending a ton of money on sales and marketing. And also in research and development, check it out, $31 million. So about $110 million total in research and development and sales and marketing. And they've been increasing it year over year, as you could see, pretty much over 15% of the revenue. But because of that, it is currently depressing their current earnings. As you could see from here, there's a loss from operations. So they're losing $92 million a year from these investments in operating expenses, sales and marketing, research and development. But remember, guys, most tech companies are deploying billions into sales and marketing and research and development to grow future earnings. So if you really think about it, this is kind of an unreliable way to measure the long-term ability of a company to generate cash flow. Why? Because under GAAP accounting rules, research and development and sales and marketing are subtracted in a year. So some of the intangible assets that they have to use for research and development and also sales and marketing, they must subtract these operating expenses straight off the gross profit, and it's going to cause them to look like they have a loss. But these are pretty much outdated accounting principles. They require nearly 100% of R&D. So here you have R&D. They require nearly 100% of R&D and also 100% of sales and marketing. to be immediately expensed in that year. So these must be immediately expensed in 2024, while it allows hard assets like property, plant, and equipment to be depreciated over many years. But research and development and sales and marketing is an investment into NeoGenomics. To depreciate means to slowly amortize something or slowly kill it. So when you think of companies with hard assets, they're able to spread this cost out through a couple years. This is more for old economy assets. But for newer tech companies, SaaS companies, NeoGenomics, it's kind of unfair that the rules that they have to expense the total expense in 1 year. So one thing you need to ask yourself is, if NeoGenomics can spend this $84 million in sales and marketing to add profitable customers in the future, then it doesn't matter if it's currently depressing these earnings right now today. You have to think of it as an investment into the company. Research and development is an investment into NeoGenomics. They just can't amortize it and they can't depreciate it, and they must expense it in 2024, causing them to have a loss from operations. Okay, so that was kind of a lot, but did any of that part make sense? Let's just do a quick summary real quick, just to sort of end things. $800 million valuation at $6.40. So $6.40 is pretty much at the lowest of the low that you could buy this company. But what am I going to be waiting for? Okay, so first off, new CEO, Tony Zook, new acquisitions of Pathline, lots of money getting spent into research and development this year in 2024, 2025, and also in sales and marketing. So he is funneling that money and focusing on growth for the company for the next couple of years. That's a good sign. There's a lot of selling volume happening right now. Looks like there's going to be a little bit more downside from this $6.40. The slow slotch looks like there's going to be a crossing down, and the RSI is at 25, meaning it is oversold. I would also wait until Tony Zook, look at all this insider selling too. Looks like there's a lot of insider selling in November. I would also wait until Tony Zook, the new CEO, or other directors and insiders start repurchasing shares. Tony Zook, if you're not buying, I'm not buying. So I'm going to wait to see until there's some insider trading. I would wait to see until we start seeing some revenue from Pathline and also the new products that they will be releasing this year. But as of right now, I would be a little careful investing in these prices. I know it is the low of the stock in the past 5 years, but just to keep it safe, wait till they release some new products. Wait till some insiders start repurchasing some shares. Wait until the company decides to maybe issue a stock buyback, which they haven't. I would want to see some improvements in cash flow from operations and also free cash flow per share too. So let me know what you guys think. What are your thoughts on NeoGenomics? Can this company be a good turnaround? Let me know what you guys think. Thanks for watching this long video. This might have been the longest one, but give me a thumbs up, like, follow, subscribe, and thanks for watching. We'll see you on the next one.